Rolf Habben Jansen, CEO of Hapag-Lloyd, the world's fifth-largest ocean carrier, tells CNBC he has an improved view on trade for the rest of 2024. Conversations with clients and other logistics companies have led the shipping CEO to a more optimistic view on demand in the second half of the year than projected in previous forecasts. We also see that inventories are depleted in many cases, and so far we've seen a good recovery after Chinese New Year, Jansen said. So we've been fairly happy with that. The company reported a steep drop in its 2023 net profit this week and slashed its dividend, which led to a stock decline. It was the third-best group profit in company history, albeit significantly lower than 2022, which was fueled by container congestion and high freight rates. The last quarter of 23 was difficult because rates were at unsustainable levels, Jansen said. I think everybody noticed that. We saw them coming up a bit towards the end of the quarter, and then of course, the Red Sea crisis, which again changed the market. While the Red Sea issues have resulted in a shipping container rate spike, Hapag-Lloyd is forecasting a decrease in its earnings this year as costs increase related to the trade diversions from the Red Sea. According to SONAR, the price of 40-foot containers started its run-up in the U.S. on January 3, ranging from $3,063 to $3,763 to a peaked on February 9 from $5,353 to $7,329. While rates have now declined, U.S. companies are paying more, with rates from Asia to West Coast ports up 155% year-to-date, Asia to East Coast up 129% year-to-date, and Asia to the Gulf Coast up 71.2% year-to-date. Attacks by the Houthis on commercial shipping interests in the Red Sea continue, with a tanker attacked in the Red Sea Friday while underway northbound in the Red Sea, though the tanker was empty at the time and continued on its journey, with no crew injuries reported. The day prior, the tanker was assessed to have been the subject of a near-miss 47 miles southeast of Aden, Yemen. It's a concerning situation, and I think the Red Sea outlook is very difficult, Jansen said. We hope that it will be over in a couple of months. But I'm very well aware that despite all the efforts that many countries are undertaking, some also believe that it might last quite a bit longer. In the end, we will do whatever we can to keep our people safe, even if that means that transit times are going to be a little bit longer. The route around the Horn of Africa is longer and more fuel is being burned by container vessels. In addition to the added costs, according to Sea Intelligence, the Red Sea diversions could increase carbon dioxide emissions by 260% to 354%. As a result, ocean carriers with Europe-bound vessels will be paying higher emissions liabilities under the EU emissions trading system.